Today we're going to be doing top to bottom analysis on British pound, US dollars, GBPUSD, and we'll be starting our analysis on the monthly time frame. As usual, we'll start by identifying our zones. Our zones are essentially points of what price has bounced off open. Points of our zones are actually points that price has found either resistance or say support. But the thing that makes us love zones the most is resistance that turns support. That might even become resistance again. So those are how we identify our zones. So right here we have a valid monthly zone because price has found resistance on this level multiple times. We also have a zone here. When price forced its way through at this point, which should make our zone invalid, but then price came back and bounced off of it once, making this to still be a valid zone. So we have another monthly zone here. There's a zone here, as you can see. Price has found resistance on this level multiple times. And not just that. If you go a little bit further back, you can see that price found support before coming down and finding resistance at this level. So that makes this a valid zone. So here we have another monthly zone. A downward trend line can be drawn across these 2 points. This trend line is too far, it's too large, and this is the higher time frame. What's more, the trend line has even already been violated, so there's no point in drawing it. Don't forget this is the 1 month time frame, so by the time we go down to the daily time frame, all these lines will have an incredibly wide spacing between them. But we can draw a trend line across these 2 points. This will be our monthly trend line. Let's go down to the weekly time frame and we'll do the same thing. We'll identify our zones, draw any potential trend lines that we can draw. Right here we can already see that this is a potential trend line. Although I'm hoping that I'm not drawing it a little bit too early, but it is a potential trend line here. As you can see that price has rejected over that and jump, so we would have a weekly trend line there. Now on the weekly time frame, we identify our zones and our trend lines. There's a zone here. Let's see price bounces off this region. Price came back, rejected from this region. Price pressed into this region a bit, but not without giving a slight obedience of the level. Price passed through, pressed into this region, and then bounced like this. So we have a range here. You can see how price has responded around this zone. Price bounced over it twice. So it's actually support, turn resistance, turn support. So this is our weekly zone. Okay, I'm not seeing any other zone that are very apparent. I'm not seeing any other zone that are very apparent. So let's go down to the daily time frame. I can actually see a downward trend line around here. But let's go to the daily time frame to make it clearer. Okay, so on the daily time frame, you can see we can draw a trend line. We can draw a downward trend line across these 2 points like this. You can take it down to make it fit, but let's not do that. The best way to draw a trend line is across the wicks, the tip of the wick. At best, you can draw it down the wick a little bit if the wicks are exceptionally long. So this is our daily trend line. Now let's see if we can find. Let's see if we can spot any zones. We already have a zone here. This is our daily zone. Which can say that price can support once, twice. Price passed through, we should make the zone invalid. But the price came off and support once, twice, 3 times. Price carried down. Price bounced off of it before breaking through. The price has come off it again. So it is not impossible for price to come to touch this line in the trend line before going down. So let us see. So this is our daily zone. Now at the end of the zone, we have a zone around here. You can see that between. I see that there's a region around here that price responds to. So to get our zone, we'll just look for the closest round figure to this level, which is 1.3600. Okay, so we'll just put this here. Yes. Okay. So we have a daily zone here. You can see that price has bounced off it multiple times. This is another daily zone. Actually, let's put a zone here. The significance between differentiating from monthly zones, weekly zones, and daily zones is obviously on the monthly zones there's less information. In the monthly time frame, there's a more general view of information. And the monthly zone and the weekly zone is a more general overview of the price movements. So those zones are essentially much stronger. The higher the time frame, the stronger the zones. The lower the time frame, the weaker the zones. But conversely, the lower the time frame, the more zones that appear. And the higher the time frame, the fewer zones that appear. If I were to zoom out extensively, I would be able to identify at least several more zones. So I'm trying to focus on the region that is closest to our current price movement. So the next thing we will now is to identify our trend origin. This is obviously our trend origin. Yes. This is our trend origin. This is our market structure. We have an impulsive move, low by correctional, impulsive correctional, impulsive correctional, impulsive correction. This looks kind of like an impulsive correction because price remains stuck at this level forever, giving us a number of impulse correctional impulse. Let's take a look at this a bit. Okay. This is not actually an impulsive correctional. This is one whole impulsive move. This is one whole impulsive move. Because this level does not break the highest high. So now we identify our swing lows. We identify our swing low on the daily time frame. So daily daily. Let's delete this, and then we'll go down to the 4 hour time frame. Now, because price has clearly switched from a impulsive move on the daily time frame to a correction on the daily time frame, we will go to it. We'll check all of our swing lows and see if there's any specific pattern that price tends to print out before it switches from a correctional phase back to an impulsive phase. And if we can spot that pattern in real time, that's in the current price action, then once we see that pattern, we know that we know that the next impulsive move is about to start. And if we don't see that pattern, then we will know that maybe that trend has reached its natural endpoint. So we can see a W here, but it's actually also a smaller W here. So I could draw this as one big W, or I could draw this like this as a W here. So this is the pattern that I spot here. I come down to this level, I do spot a bit of a W pattern here. And the price comes to test it before going up. Which is a little bit similar to what we have here. But let me focus on the W pattern. Maybe a bit of a W pattern. Here we actually have something similar. Price forms a W pattern and then goes down. So maybe this is what we should be expecting. We should expect price to form a W pattern and then run down significantly lower. Here we have a very clear W pattern. So I have a W pattern here. Okay, so we had a W pattern here. So this can be considered maybe a fake out. So right now I'm waiting for, say, for price to form a W pattern around here. And we'll go long on the pair. Here. So this is essentially top to bottom analysis on GBPUSD. If price does not form a W pattern, then we do not bother to enter the trade. It's as simple as that. But if price forms a W pattern, then we enter the trade. But not only do we enter the trade, because price has a tendency to hunt for the base of the W pattern, we have to give at least proper distance. So this is about where we stop loss. So that's it on top of it on GBPUSD.